Bloomberg analysts say Bitcoin bottomed out like 2018 amid unprecedented microclimate. In a new interview with Scott Melker, McGlone compared Bitcoin recent rally into $20,000 range to BTC bottom formation in 2018 at the 5,000 price level.
We're still pulling the liquidity from the market on a global basis, a historical, unprecedented basis, for good reasons. And if equities go higher, if risk assets go higher, these liquidity is more likely to remain constrained from central banks. So what I'm showing you is a chart. We see this potential island bottom developing around 20,000, the same way it did around 5,000 back in 2018. The big difference is what I show you in white is the Fed funds futures. Back then, the Fed already started easing, and we held the bottom and broke out higher, and then we had that issue 2019.
McGlone's one, the king crypto asset, may not continue to surge amid the challenging macro condition and the Federal Reserve interest rate hiking policy, which put downtrend pressure on risk assets. He says, one indication that Bitcoin rally is not going to continue is that the Nasdaq is likely to dip below its 200-week moving average. The Nasdaq has held a close correlation with the performance of Bitcoin in the past year.
And this is the Nasdaq. The Nasdaq is at its 200-week moving average, not 200 days. 200 days is for day trades. The 200-week moving average. In the history of the Nasdaq, since it could be calculated, we only broke through that level 3 times. And every single time the Fed was easing. The last good example was 2008. Fed was easing aggressively. Right now they're tightening aggressively. So you look at that, you can't be too excited about any markets until we have, give it some time. I'd say don't relate. Big picture, yes, really bullish Bitcoin, but to me, this is an environment that's unprecedented where we're having bounces in what we know are bear markets, and the Fed just says, sorry, we're taking the punch bowl away, we're not giving it back to you.